Yo, what's up again, YouTube? It's Cody here again with another update. Today is Tuesday, December 31st, 6 o'clock my time, which is Pacific Standard Time. Um, yeah, we're going to have New Year's tonight, so that should be pretty fun. Hopefully, you guys be out doing some fun stuff tonight. But we'll get back into it. My last video was last Thursday. I don't remember the exact date, so probably about it was about the 26th or so, the day after Christmas, and we updated about having really big profits that day. Obviously, we gave some back, or we gained some more on Friday, and then we gave some back on Monday. I was talking to you guys about the hedging opportunity, so that kind of helped cushion some of the blow for Monday. As you can see, I believe, yeah, on Friday we gapped higher and then we kind of reversed down, and then we had another push lower, and this is the S&P, and then we had a push back up today, about 1/4%, and basically, I don't think that the downside is fully in yet. I think we're gonna have another push lower, maybe towards 317 in a half or so, and then we could even head down towards like 312 or so. Towards 317, there's a couple options that you can think about doing, and so I'm still not sure how I'm gonna do this. I kind of have to watch the price action a little more throughout the days. The first days, or pretty much the last like 2 days, and the first 2 days of every month change is always a kind of a difficult period because there's a lot of you know big pension fund rebalancing, a lot of hedge funds doing different things with their books, and so there's a lot of different mechanical effects to the market on the beginning of the month and the very end of the month because of these rebalancing mechanisms that a lot of hedge funds use. A lot of it's algorithm algorithmic. Sorry, that's a pretty hard word to say right now. But yeah, so it doesn't mean they've changed their bias, long term about something, but it means that they just got to rebalance. They're a little overly positioned in one and not as positioned in another, so they're gonna kind of swap a little bit of stock out. And so you kind of expect some funky moves during these times. I'm still trying to watch, but basically the two options that we have are when we take that push towards 317 and a half or so, start closing some hedges towards 312. I would pretty much be out of all the hedges. As far as the January 10th 320, 315 put spread that I talked about, it was actually 91 cents that I got it. I think I was saying like 93 cents in the last video, but it was 91 cents, and you got an opportunity to, when it pushed even higher, to add a little more. I added a little more, not too much more, but I had a decent little hedge on, and it didn't cushion everything, but it still cushioned, some of the blowback, 'cause Facebook got hit, a lot of names that I'm in. But what I'm looking for, a lot of these sell-offs, a lot of people get frustrated with them, and it's understandable and stuff. But you got to look at it as like an opportunity. I think we're gonna have another push lower. Like I was saying, I don't necessarily think this is exactly done yet. And so what I'm going to do is either just take off the hedges and keep what I have long, Facebook and PayPal. And I mean, I don't have as big of a position in PayPal or BABA, but I still have a little bit. BABA, if it gets down to that 210 range, I'd maybe look to add. Facebook at the 202 range, I'd kind of look to add. Um, let's go over that a little bit. So we'll go BABA. I've been talking about this one for a while, and finally kind of had a little pull in. And I think BABA, if we can get into this 210 to 209 range, that might be a good spot to add. I'd only add very small because I do think we're going to push towards 220 still. I've been saying that since the 12th, about this having a long-term breakout. We did hit 218, so pretty much there. So I'd add like a small chunk here. I wouldn't go too crazy, not nearly as aggressive as we were going up, but something to look at. And then something else to look at on the dips. Facebook. This is still my favorite long, my biggest position long, and this could go down to 202.5. I'm not positive if I'm going to add more, mainly because what I'm looking at is Microsoft. I'm really wanting to buy this one on a dip. We're starting to dip down. If we can get this 156 or even below a little bit, then I'd really like this long. I'm gonna add it there for sure. Not like the heaviest position ever, I suppose, but it's gonna be a pretty big one for me. I like this one similarly to Facebook. I just like how it trades a lot, and so I'd be looking for that as the opportunity for this sell-off. And what you want to do is if you added all of them, you have Baba, Facebook, and Microsoft, which I'm only going to add Microsoft for sure. The other two, I'm still waiting on to kind of see how the price action acts. But you gotta, depending on how much you add into things, you gotta look at the way that you're hedged. So if I add Microsoft, yeah, I'll take off maybe a little bit of hedge, but I still want to keep a pretty decent part of that hedge on, for even if it's lower than 317.5, because that's where I'd start taking it off. So you could either take off some hedge and kind of keep what you have long on right now, which shouldn't be a whole bunch. I mean, my biggest one's Facebook, but there's certain things like PayPal and AbbVie and stuff like that that I still have positions in. So I would just kind of look at that as basically the put spreads went from like 91 cents. They hit a high of probably $1.20 or so, so they were up like 30%. Not, and I'm looking for like a bigger downside. So at 317, start pulling off a little bit of it, and at 312, I would be out of like pretty much all of it because the put spreads would be really big by then. And but what you want to do is, depending on how much you add long towards some individual names, you want to make sure that there's some type of hedge, because I mean this could end up being a nasty sell-off. I mean it really could. And we have a tendency of breaking lower in pretty violent ways throughout the whole year, and so I'd kind of look for, like I said, to add into some longs, but if you do, then keep all of your hedge. If you're not adding into some longs, you just kind of add a Microsoft, like I'm kind of thinking about doing for now, unless if the price action gets a little better, verifies a little more for me, then I'm gonna sell out of a little bit of the hedge, add the Microsoft, keep the rest of the hedge to kind of hedge myself from the downside. It definitely didn't. I made such big profits last Thursday, I believe, that it was such a big day that today was a hit, or not today, but yesterday or Friday was a hit for sure. But um, or wait. Oh no, no, Monday was a hit for sure. I'm sorry, I'm trying to remember the days. But and then today was kind of like a neutralish day. Facebook closed up a little bit. Baba closed in, or actually no, Baba closed green a little bit as well. We'll go down the list. And uh, PayPal was green by a little bit. It's starting to get a little more appetizing for like another dip buy. I wouldn't be in these things as aggressive as we were. We talked about PayPal here initially, spiked up, sold a lot, added some, sold some, and now we're kind of in this range again, looking to kind of add a little bit. It's kind of in this little, pent formation, or whatever chartists want to call it. Um, Qualcomm. Qualcomm's still the one it's flagging for a while. I talked about doing call spreads in this area and getting a little more aggressive on the long side towards 85. So that's a little bit of ways. So it's not like my favorite thing, but it's still a good one. Square just got completely wiped out. Had a reversal, but the options are pretty much toasted at this point. I probably should have cut them as a loss, but I didn't do that. But I mean, it happens. Not every trade is going to be perfect. Like pretty much no matter how long you've been doing this. I've been doing this for 4 years now, and you still make mistakes, just not as frequently. Boeing, this is one we exited for a loss as well, and exited on this down candle. Or a short position, and we continue to push lower. So that kind of sucks. That one did actually continue to work. I still think there's potential to break this low of this range here and kind of push to the downside a little farther, maybe towards 315 or so. But I'm not in it, so. And yeah, so we went over Facebook, Microsoft. I think I showed you guys Microsoft as well. Like I said, if we can get 156 or a little better, I'm definitely gonna buy this. I'm looking at this dip as an opportunity to add some. Like I was saying, that's why we hedge during certain times. I talked about hedging twice in my last two videos. I didn't put on the biggest hedge ever to where it hedged everything, but it cushions the blow. I still hold all the hedge for another down push in the market. To push down to, like I said, 317, start cutting, start selling or closing some of those put spreads for pretty nice profit at that point. They should be paying about 250 or so. So, 250% or plus 250%. And, and so yeah, and at 312 I'd take off a lot of it. But at 317 I would take off a lot if I didn't have a lot of long exposure. But I mean I'm not nearly as long as I was size wise. But and I've been saying not to. Names like Adobe, I said it has potential to hit 338. We continue to push towards 333. I still like this one for a push towards 338. This could sell off a little more too, kind of broadly with the markets. I kind of expect a little more down push, but like I said, Microsoft at 156, I like it a lot there. Facebook, if you don't have a position yet and you're thinking about it, then yeah, 202 would be a good level, and then Baba around 210. Good place to add a small position. Like a little call spread or something like that. And I'll update you guys based on what I do actually depending on the price action. But the market's always vulnerable for a big sell off. I'm one of those guys that I trade the price action. I try to leave my personal bias out of it, and because I'm pretty much fundamentally bearish on the market. I think that the market was actually going to sell off a lot. But I've always decided, or not always, but from a while back, I just remember deciding to myself, I'm not smart enough to know when the long-term trend's going to end. I have a motto. If I can't guess where a stock's going to go within a few days, how am I going to ever know, where they go in a few years? We've had dot-com booms, the tech bubble valuations were extremely high. The market can get very exuberant and go much higher than anybody could ever imagine. You look at a stock like Apple, a lot of guys, a lot of guys have been very optimistic on this, no doubt, but, a lot of guys, they try to short this thing, and it's such a powerful stock, and it's up probably 90% on the year, the biggest stock in the world. So it's pretty crazy when you think, wow, it's up 90%. The fundamentals didn't get better 90%. The earnings are basically flat, and but things don't always work that way. Just always be mindful that things can go way higher than you could ever imagine, or way lower. The market does irrational things all the time. It's part of life, and you just have to kind of have that mindset of watching the price action. If you want to be a shorter term trader, if you're an investor, then of course you should focus on earnings and certain things that's gonna give that company that long term trajectory. But trading is a completely different animal. So you have to basically let the market tell you what to do, and you can't think what you want the market to do. And it's it's kind of like trade what you see, not what you think, that type of deal. And so, not I don't appreciate the market just rallying forever, but I mean, if it does, it does. You just gotta play it like that. And like I said, we could easily have a huge sell-off. We're at this, we're at a very high level in the market, so we're over 3,200, faster than probably most people thought. there wasn't very many analysts that had that high of a target. You know, J.P. Morgan and certain funds like that, they've been on this thing for quite some time, but not all of them, you know, have been right. You know, because this market's not the easiest game in the world, obviously, but yeah. So you know, basically we didn't go over gold. I closed the rest of the gold today. We got a spike and reversed, but I closed the rest of it, and I bought them for 25 cents. I sold the rest at 65 cents. So about 160% profit or so. So nice on that. I mean, that was only 20% of it. Sold out of 30% here. Sold out of another, like, basically I was selling out of 80% here, and then on this day I just closed the rest, and you know, not at the high, but you know, somewhere in this candle. Got them for 65 cents. They might have been trading even at 70 cents at one point. But but yeah, and you know, oh, and AbbVie, I still got AbbVie, still a good sized position. You know, I've scalped out of some, I bought in and out, added a little bit, sold. You know, you got to simultaneously, you know, do a lot of these things. We don't have to, but it's good to do that. You know, it keeps your patients at a different rate, and all kinds of psychological effects that sizing in and out does. But I still like this for a push towards 93. I've been saying this like somewhere in here. We pushed higher, and we did that. Oh, and another thing I want to talk about is the. I didn't see it so much today, but on Monday we saw this kind of like a trend change. You know, one day never makes a trend, but it was interesting to me how everything was trading. I just noticed a lot of the, you know, the unicorn style IPOs, you know, the more junkier stocks like Macy's and, you know, and certain names like that, you know, kind of like the Dash for Trash style, you know, it seemed like that kind of trading was going on. And I don't know. It was weird. Like, so just noticed this kind of like trend reversal. I should have updated yesterday, but I did. I'm not like pretending I bought it yesterday or anything. I actually did. I bought Peloton yesterday, and it did go higher. I still like it just as much as I did. Yeah, I'm up a little bit on the position, but what I did for Peloton is I bought the January. Oh, this is a 5 minute chart. Oh, that's fine. I bought the January. I bought it somewhere in here, you know, somewhere in this range, and I bought the January 15th, 28.32 call spread. So this spread right here. And if you guys don't know what I'm talking about when I say a call spread, basically I bought the 28 call for like $1.63, and then I sold the 32 calls against it for 60 cents. So I did a net buy of $1.03. So basically I can risk $1 and I can make up to four, you know, between the spread. And you know, that's kind of the idea of a spread. I know most of you guys probably already know all about spreads, so I don't like to get into too much. If you don't know a lot about them, and you might like me to make a video on kind of like the basics of options and spreads and diagonals, verticals, butterflies, you know, covered calls. I mean, there's cash secure puts. There's so many ways to trade options, and so I don't know if you guys maybe want me to make a video like that, like throw me a comment or something, and I might think about doing that as well. And because you know there might be some of you guys that don't trade options at all and even don't even know how to buy like a straight call, or you know, or in the different deltas and how gamma moves and all kinds of different factors and variables that go through options. But basically, I like it. The 28.32 call spread out in January 15th, pay about a dollar. It's probably about $1.20 right now, but still great risk reward. Um, you know, anything where if I could risk one and make up to three, I'm happy with that risk reward. And so this is a risk one, make four, and I like the setup. You know, Peloton is one of those, you know, unicorn style IPOs, and like I said, I saw this trend change towards names like this, so I got into it. And even if it dipped down back in the area where I got it, and then that's even better for you guys. If you guys haven't got in, you know, I don't have the biggest position in this, but I do have a fairly good size, you know, because I do like the setup a lot, and I like the maybe this style, these different names might start to move because a lot of the bigger names were the ones that got hit the hardest. Facebook got hit pretty hard that day, compared to the market and stuff. Baba and things like Baba was actually very weak that day, so it was a little concerning. But like I said, I look at this sell-off as an opportunity. Like I think if the market's going to push down SPY towards 317, that's about 3170 on the SPX on the actual index. And you can look to either take off some hedge there or add on some long size, and and basically, yeah. So like I said, Microsoft's, in my opinion, it's an opportunity to get it. So even though I got knocked a little bit on Monday, profit wise, I still like these dips because they're opportunities, because they're ways that you can end up making some more money, and so forth. I feel like I've been kind of ranting for a while, and I hopefully, if you guys did watch all this, you appreciate it. But I know I can be a little repetitive. I try to wing all these videos. I don't try to edit them and all. I don't want to do that. I'm not gonna spend my time editing things and doing all that. I want to be transparent. I'm always trying to be honest about things, and I'm always trying to tell you about certain things before they happen. Like I just see so many guys on YouTube, and I'm not gonna say any names or nothing, but in my opinion, they're BSers. I mean, they recap things that have already happened, and it's very easy to draw some lines on a chart and pretend that was your analysis and so forth. And that's the other thing. I mean, when people are obsessively about just breakouts and wedge breaks and all that, I mean, it's not about. I mean, yeah, it's a valid setup at times, but knowing when that setup is valid is everything. I mean, you can't buy every breakout and make money, and nobody can do that. And maybe you'll get lucky for a while. You'll have win streaks and all that. But what I notice about a lot of these guys is they'll say, "Oh, you could have bought the breakout, made 50 cents." But if your stop is more than 50 cents, even more than 25 cents, then it's really not that good of a risk reward. They never tell you where their stop is. That's why I love options. It's a limited downside risk, so you know exactly how much you can lose, even if the market tanks super hard in one day, or some black swan style event hits it or whatever. You always know exactly what you're going to risk. That's exactly why I trade options. Every time I do stock trades, I always have a stop on them. And so you got to be mindful when people don't tell you their stop, and they tell you only about the reward and not the risk. All the pros, they care more about the risk than they do the reward. Always know that I always feel like the beginner traders, they look for charts with a lot of opportunity, like a lot of upside potential and all that. And the pros, they look for the stock with the lowest risk, like how can they stay out of trouble, because everybody's always thinking about not losing money. That's the most important thing. Um, Another thing I always say, if you're newer to trading, definitely try a paper account, a simulated trading. That's a perfect way to learn. The emotions aren't the same, obviously, because you don't put your money to work. So you still have to get over that hurdle over time, but still, though, it will help you strategize things more. You should never just throw money into the market and start trading it without learning some things, and don't trust all these gurus and stuff that do things on YouTube, and I don't know. There's just certain guys you just have to be mindful. I mean, you could always follow them and kind of respect what they do, and I always do. I respect every trader, but and every trader, the human brain is very powerful. I'm not gonna sorry to rant, but it's very powerful, and you can adapt to several different ways of your own niche and style of trading. So I'm not trying to knock anybody's strategy, but just be careful to say you can buy any breakout like, oh, I could draw a level on this. I mean, it's easy for me to say that, oh yeah, I did it here because I saw this, resistance here, so it broke. I mean, it's in all retrospect, it's easy, but if you bought it here on a breakout, where's your stop? That's what I want to know. If it only went up to here, your stop should only be like to here. You can't be that far. And a lot of guys, they'll show you about the breakout and the upside potential, but where the fuck do you get out, when the trade's wrong, and they're trading stock. And that's why I like options. One more time, if you guys don't know a lot about options and you want me to make a video kind of about them, and the different variables and stuff and spreads, then leave me a comment and I'll think about doing that. And so yeah, this will be the end of this video. I'm pretty sure I went into this for quite some time. And so yeah, I appreciate you guys once again. Thank you so much for watching, and peace out, guys.